This is probably what we're most excited about as Americans. The Iranians have agreed to invite IAEA inspectors back into their country. That is a major milestone for the American people and the first step in permanently denuclearizing or permanently ending a nuclear weapons program in Iran. And that's exactly what we wanted to do. That's exactly what we asked to happen.
Overnight negotiations in Switzerland leading to a major breakthrough between the United States and Iran, with progress towards peace and oil flowing through the Strait of Hormuz. Can investors finally breathe easy? That's the question. Welcome to the Big Money Show, everyone. I'm Jackie DeAngelis, along with my co-hosts Taylor Riggs, Dagan McDowell, Brian Bremberg, and with us for the hour, Fox Business contributor Lou Bassanese. A brand new 60-day roadmap to a final peace agreement is now in place. Vice President J.D. Vance confirming that Iran has agreed to invite nuclear inspectors back into the country, calling it, quote, a major milestone for the American people. It's a welcome development for investors as well, with the price of oil already sinking below $75 a barrel. The deal is real. The oil is flowing. Gas at the pump already reflecting some of this progress, now well under $4 a gallon. But a roadmap to a deal is not a deal, not quite just yet. And we've got markets mixed today. Technology is lower. You've got the Dow a little bit higher. Yeah. You've got this oil sub 75, which is substantial based on what we do have, Lou.
Yeah, I think I've called this, we have a term sheet. We don't have a definitive deal yet. And even if we had a peace deal, it doesn't mean safe passage through the strait. It is technically open, but we're not going to get back to normal passage unless we mistrust and keep verifying, like J.D. Vance is laying out. I do believe this is a significant milestone, being able to get into Iran and assess whether or not the attacks thwarted any nuclear ambitions as much as we anticipated that they do. We need proof of that. But I think oil is the tell. I mean, you're putting on it. You said the deal is real and oil is confirming that, staying at $74 a barrel. I think this is the new norm. We're going to hang out here in the 70 to 75 range for the foreseeable future. Gas prices are going to get back safely into the mid threes. But still, there's a lot of work to be done in the 60 days to get to a definitive peace deal. And I just don't think, I mean, we've talked about this 100 million times with China, right? Can we ever truly trust China to fulfill their end of the bargain? Do we think Iran's going to be any better?
Well, I was just going to say that. They can say a lot of things. Actions speak louder than words. Absolutely. And that's when you really will see if this is real or not. Lindsey Graham was on the Sunday shows yesterday, and he was saying that he is praising President Trump's effort and the whole administration's work towards a diplomatic solution, Brian, a deal. But he said ultimately he thinks it will fail. And then he talked about bombing. So I think about that as well as I've been studying this and watching it play out. And you know, the point Lou is making is real. Where does this go from here? And will they abide by it? And will it get done in 60 days?
Yeah, I mean, look, you got people on one side saying this deal's awful. You have people on the other side saying it's a pretty good deal. I mean, you don't know. You don't know till you go through it and you find out what happens on the other side. We don't know. I mean, the carrots are pretty juicy here. For Iran, the carrots are pretty juicy. They can sell a lot of oil over the next 60 days, sanction-free, maybe longer than that. But I would say the oil, Lou, what does the oil tell you about what's happening? So let me just, like, the oil tells you, oil prices tell you straits open, the carrots are being eaten. It doesn't tell you anything about the national security status of the United States vis-a-vis Russia.
So I would tell you, if there was any fears about that, though, we would have been back with an 8 handle on it, maybe in the 9 handle over the weekend when we thought things were falling apart. And we just haven't seen.
No, it doesn't tell you anything about whether they're going to do anything about their nuclear program. Oil doesn't tell you anything about whether they're going to abide by the nuclear program.
I have a question,
It's a leading indicator.
Can I add this? Because I'm thinking about what you're saying here. And one of the thoughts I had this morning when I heard that Iran was actually selling oil now, having that opportunity, is that why the price of oil is lower? Because there's more oil flowing, but it's their oil. And that's revenue that they then get.
This is not a magic switch. I mean, we talked about this last week, Dagan and I. We're at just bottom barrel inventories in Cushing. If you, over the weekend, open the strait, you don't suddenly solve that inventory problem. We were a billion barrel surplus before this war started. We can't replace that easily. We can't replenish the strategic petroleum reserves easily. So from a demand and supply imbalance, we're still heavily weighted towards a lack of supply. So that's not playing into the prices. That's why I say it's a good leading indicator, because we know the basic economics would point to, hey, if this is really going to get worse, not better from here, then prices should be going higher. And we just haven't seen that surprise spike on these on-again, off-again, bipolar, back-and-forth discussions.
Let me just throw a last thought on what I'm saying is it is possible there's a world where oil prices are low and Iran is dangerous. That world is possible. So I'm just saying you can't look at oil prices and say they're low, therefore our primary objective with Iran is solved. It's not. Yes, oil is flowing, and I agree we had all the problems at Cushing and so forth, but I'm just saying oil could be low and Iran could be on the precipice of a nuclear weapon. So we can't use that as our measure of whether our objectives with this conflict.
Agree. Let me just clarify. I would never suggest that the world is going to be free from the threat of Iran. There's always going to be a nuclear problem with Iran.
Well, and that's an issue because this didn't play out with a complete regime change. This is, to me, not a new regime. But what I was interested in, Taylor, was this idea of the art of the deal being applied to everything that President Trump does. And this idea that some of the funds that Iran is going to have access to will be supposedly used to buy agriculture products from us, from the United States. I mean, this was an issue in his second term with China, for example, trying to get them to buy more. Can we see a world where Iranians are eating American soybeans and wheat and everybody is saying that it all worked out?
Gosh, I am just not that optimistic. I mean, maybe, I hope, but I feel like when it's Iran, we're talking about China 2.0. China never upheld its deal during Trump 1.0. They've been promising to buy soybeans and Boeing planes for a year now, and I'm not really sure that they're following through with those plans. So I love that this includes this deal, this $300 billion investment fund that's not U.S. taxpayer money, but incentives from U.S. companies or Gulf nations that if Iran behaves, there's sort of that opportunity to invest, prosper, bring success to the local people as long as the money that's invested in Iran flows down to the local people. But again, that's a big, big ask. And I just don't know. And I guess part of me thinks not our problem. You know, like, again, our problem is no nuclear weapon and keep oil prices relatively low or stable. To the supply and demand side, it was interesting. Another article this morning said there's so much of a glut in our storages globally that it's going to take a while just to get back to storage and then to be even thinking about a surplus. And so oil
a deficit in the storage, not a glut.
Deficit in storage.
We've used up all the storage.
I'm sorry, replenishing our storage that we've drained, getting it back, and then thinking about on top of that. And so first I was wondering why we could get oil back down into the 60s. And the article said because globally, everyone's going to refill what they lost before they think about a surplus in supply. And so we're not quite there yet. The only other thing I'll add, Jackie, about these markets that I think are reading through this and are looking at above and beyond, we've been talking about AI, which is incredible, but also another thing I read this morning, Mag 7 is down year to date. The S&P 493 is up 13%. And I just would not have thought that in a year where we thought Mag 7 and AI was going to save us all. It's the 493 and the S&P that are doing the heavy lifting. I think that's good because that could also be real economy stuff that we've been talking about. And so I think good in terms of diversification that it's not just Mag 7 that's leading us higher at these moments.
Dagan, your thoughts on any of it?
Well, the IAEA going back into Iran is meaningless. It's the UN. What are they going to do there? Potentially nothing if Iran has its say. If it was U.S. weapons inspectors, that would be something different, number one. Oil is fungible, and quite frankly, investors in the market, and I would argue even drivers, don't care if the oil comes from Iran or not. As long as oil is plentiful and available. And clearly, part of the calculation of this memorandum of understanding is that voters are not willing to pay an extra $1 a gallon as a regime-busting premium. That we needed, and to Taylor's point, I said this last week, there were two things that needed to happen, and it buys the United States some time, and that was to replenish inventories and get all oil flowing out of the Persian Gulf. And I think it was Friday and Saturday that ships were starting to be loaded at Karg Island. And so Iran was wasting no time starting to move oil out of the country, but replenish inventories to keep energy prices from going up, because we were at working bottoms in Cushing, Oklahoma. Like you lose another 1 million barrels in 1 week, and based on the daily calculations, if you lost another 1 million barrels, those tanks can't operate. That's where we were even in the United States. And so, but you keep rebuilding energy inventories, and you keep energy prices from going up, and you also keep interest rates in check, because the Federal Reserve won't have to raise interest rates if in all these inflationary things fed by energy are kept in check. And then also you aren't spending borrowed money overseas and driving the deficit higher. But I want to note one thing about Iran selling oil, and the U.S. Treasury has issued a general license waiving key Iran oil sanctions through August the 21st. And this is the first, I think, we are effectively, Javier Blas wrote this, rolling back 40 years of oil sanctions temporarily on Iran. And even based on the way it's written, even U.S. refiners are allowed to buy Iranian oil. And the general license not only allows the import of Iranian oil to pay Tehran, but also do so in U.S. dollars. And we have no control over how that money is spent. We can hope and pray and get on our knees that it's spent with good intentions and for good purposes. But it's a terror regime.
Right.
And they're clearly, as Dan Hoffman has pointed out, been behind Hezbollah, goading Hezbollah to create unrest in Lebanon, provoke Israel, and then blame the United States and try. And again, they are an instigator and a terrorist nation, and none of that will ever change. Short run, oil's flowing, but it's terror oil.
There also was a really good article in the New York Post today talking about and showing some pictures on the ground in Iran of women walking around without the hijab on. And they were saying that they were not cracking down because they don't want protests. They don't want any disruption in the street. And I wonder, to your point, Dagan, as soon as money starts flowing back in, how fast does that end too? It gives you sort of this glimmer of hope that something could change on the ground, but I'm not so sure.
I will just read this from Javier Blas at Bloomberg. For 60 days at least, Washington is allowing Tehran back in the dollar club to repatriate its petrodollars.
Yeah. I hear you. Okay.
That's a hell of a handout.
Yeah,
it shows how critical the situation was on inventories. Yep. I think that's why.
I said that all along. That was the why now, and it's gone. It has not been deeply reported.
Yeah.
All right, we're going to shift gears, take a look at the markets. Micron and Intel are moving today, Taylor.
Oh, my gosh. Okay, so earlier this morning, they were both up like 12%. Now they're only up a measly 5 or 3.5%. Let's start with Intel down at the bottom, up 260% year to date. We've talked about this, the major foundry deal with Apple. Mizuho goes up to 135 over the weekend, but they are still behind. Then comes Micron, intraday high that they've now surpassed. Up 300% year to date, 820% in the last year. Needham goes from 500 to 1,500. Bernstein goes from 510 to 1,300 on a price target. So these are analysts that are, I don't want to say behind, but clearly playing catch up to a massive memory shortage that most people think is not going to stop anytime soon. Micron keeps the pricing power for NAND and DRAM chips because there is not enough supply to meet massive demand.
Intel's up.
I mean, I was here 2-3 weeks ago, I think, before you were away, saying buy the dip in chips because it's not going away anytime soon.
The Micron move.
Micron, though, I think the lookout and the tell is this Wednesday. They report earnings. Right now, on a forward basis, they're still trading pretty cheaply at like 10.5 times earnings.
Yes.
But the proof shows up to say, is that really how cheap they are? But they did announce a deal today with Anthropic. So I'm just telling you, this train, the AI train, has left the station and is chugging along, and it ain't stopping anytime soon, even if Brian thinks it might. So.
All right.